Brent Wilsey, president of Wilsey Asset Management.
Good evening. I'm Brent Wilsey, president of the investment firm Wilsey Asset Management. Well, is using part of your 401k for a down payment on a home, well, is that a good idea? I bring this up because the president is trying to get ways for younger people buying their first time home, and he's looking at using your 401k to do this. Now, I gotta say, I worry about this a lot because, yes, there's a problem with the home market right now, and by the way, home building is very important for the economy, but I also believe that retirement's important as well. We're seeing people that are retiring, and just think, down the road, 20, 30 years, Social Security is not going to be there for you. You don't have a pension plan. You've really got to focus on your retirement plan. Now, the president wants you to be allowed to take the money out from your 401k. Right now, there are plans you can use where you can borrow up to $50,000 or 50% of your plan is what you can actually do. But this is a terrible idea, and I tell you why. Because the uninformed people say, oh, this is a great idea, because what I get to do, I get to pay myself back interest of 6, 7%. What a great idea. Well, it's a terrible idea, and here's why. The reason is that the money that you take out from your 401k plan could have been in a good investment, hopefully earning 8, 9, 10%. So it would compound at that level. But because you took the money out and paying 6 or 7%, it will not grow as fast. And the other thing that people don't realize, and this is just crazy, when you pay yourself that 6 or 7% interest in your 401k, it's already been taxed. You don't get a tax deduction for it. But when you turn around and you take that money out from your 401k, you pay tax on that money. So not a good plan. I do not recommend taking money from the 401k or borrowing from the 401k for your home. I do tell people to be a little more patient. Now, Kevin Hassett, who is the director of the Economic Council, I believe, he came out with another idea for the homes. He said, well, maybe what we can do is we can use 10% of the home for the equity in the 401k. Now, this sounds pretty good because, gee, homes appreciate, and I gotta tell you, I do not believe you'll see anywhere near the appreciation we've had over the last 6, 7 years on homes going forward for the next 10 years, so keep that in mind. But what you actually get to do is he's saying, gee, you can have this equity of your home in your 401k and that'll grow for you. Well, it's great when the money is growing, but what's gonna happen is that eventually when you turn 60, 65, you want income from that money. Well, you can't sell off a little piece of your home to pay you income every month. So now you have a liquid asset that you're gonna have to do something with, and you can't sell 10% of your home. So you'd have to sell the whole home if you don't have enough to retire. So they're trying to come up with these things to help people out. My feeling is we've had great run up in the real estate market for about 7 years. Economics, we go through cycles in the economy. So you have to understand that it's not always a great time to buy a home. So you gotta save for that. And I gotta tell you too, a lot of young people that bought homes 3, 4, 5 years ago, they're really, some of them want to sell their home because they didn't realize, well, I got to cut the grass, I got to trim the bushes. What do you mean I got to paint the garage doors? I mean, all these things, all this maintenance they don't realize they had to do when they were renting, it was all done for them. And also too, with the increase in costs of insurance because homes are much higher. I mean, it's not the insurance company's fault. If you had an asset that went from, we'll say $500,000 to now $1 million, well, that's a problem. It's going to cost twice as much to insure it. So don't blame the insurance companies. It's just that the asset that you have now is worth more, which costs more than insure. And you just want to make sure that by the end of your retirement, you've got the money in there. Be careful trying to put all your money into a home. Great to have that, but not always a good thing. So these are things you want to look at. For more information, we've got on our website, smartinvesting2000.com. I'm Brent Wilsey. Have a great evening. We'll talk more next week.
This has been Wealth Wednesday, sponsored by Wilsey Asset Management.